Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Thursday afternoon, we have Joyce, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100. And Brian, despite a lot of the news that we've seen, especially with what's happening in geopolitics, the Nasdaq-100 and the other major averages, for that matter, have kind of been sideways here.
Yeah, I mean, at the index level, they're definitely holding up well. The S&P and the Nasdaq-100 are both within about 1.5 to 2% of all-time highs, which for the S&P, I think, was made earlier this week, and NASDAQ maybe 2 weeks ago. So some very recent sideways consolidation underway for the index itself. Now, if you look under the index, and I bring this up because if you go on social media, it seems like we're practically in a bear market already. People who I follow and respect, a lot of concern about, and if you really pay attention, they were really highlighting individual names, and also looking at other asset classes like rates and commodities, things like copper that have been trading lower, typically, bearish signs. But the indices are holding up well. But for the S&P 500, I just saw 29% of the index is down more than 20% from its highs. So you would never know that just by looking at the index itself. And the Nasdaq 100, not as dire, but I think about 12% of the index is down more than 10% from its highs. So go ahead.
Yeah, Brian, and that's a really interesting point that you bring up, and I've noticed the same patterns as well. I think a big part of it is that you have this basket of 10 to 15 stocks that have such weighting in the S&P 500 and the Nasdaq 100 that so goes that basket of stocks, so goes the index. But as you said, when you look under the hood, the multiple sectors that are showing some signs of shakiness really is quite concerning. So it's kind of like a double-edged sword. You have these 10, 15 stocks holding the indexes up, which is a good thing. But if they reverse, then things it can be pretty choppy if you look at it just at the index level.
Right, exactly. So it's good information to know and to understand what's going on below the hood of the surface, below the index level. At the end of the day, though, it's very common price action to see different sectors, different industries, different sub-industries, level 2, level 3, level 4, depends on how minute you want to get down to. It's common price action to see, strong uptrends, sideways consolidation. Sometimes we have a bigger pullback. Sometimes there's shorter term reasons for this or that. Financials saw a pretty steep pullback after peaking in May. That largely was due to the June FOMC, which was a little bit more hawkish, and financials, most of them are very rate sensitive. So there's a lot of factors, maybe exposure to China. There's a lot of different news coming out of China now, concerns about a couple of bailouts in China, and is there any potential knock-on effects there? So there's always going to be a story as to why certain groups are selling off more so than others, and it's always going to be taking place. And sometimes it's just natural profit taking. There's many different types of investors in the marketplace. Not everybody's in it to hold it long-term and just keep adding more money to their funds on a monthly basis. There's a lot of shorter term investors, high frequency investors. You have market makers involved as well. So there's, investors of all types that are going to be driving price action and impacting different groups in different ways over different time periods.
And that's a great point that you bring up in terms of recognizing your time frame, which is why you're a resident technician here. So with that said, let's pull up your Bloomberg. Let's take a look at multiple time frames and some fresh levels to watch in the Nasdaq 100.
Sure, absolutely here. So I was actually just highlighting, just to quickly touch on a couple of things we spoke about. Copper, as you can see, it peaked back in May, and now it's testing its 200-day. It dipped below it today, but is now recovering. So, is that a potential low? Possibly. These lows right around here in March, April, after a strong uptrend, coincide with the lows that are being made today. So, pretty sizable pullback in copper, but maybe we're just about nearing the end of that run. Rates, we know it's been trending lower for quite some time. The one thing I would not the new thing, but one thing that's certainly important to keep an eye on is the U.S. dollar index, which has, it bottomed back in January. It's been in this big sideways consolidation, and today it's making its move over its recent high made last month, and also the 2021 high, which was made back in March, April. So we're seeing, somewhat of a technical breakout here. Let's keep that on the radar. Oftentimes when the broader markets and equities are in a period of risk off price action, we do tend to see the dollar to be a little bit stronger. So looking at the Nasdaq-100, a lot of investors are now focused on this 50-day moving average as potential support. Those who are less concerned about the recent corrective price action are saying, hey, we're not even below the 50-day. I don't think that's a great barometer from a technical point of view for this specific index based on the recent price action, because when we had pullbacks in February and in May, the 50-day didn't seem to really have much of an impact at all. The lows were really more like the 100 and 150-day. Back towards the levels we were back in April and May. So that's certainly a possibility over the intermediate term. When we look at the longer term weekly period moving averages and the index, the weekly candlesticks, we're clearly in a big uptrend here. Weekly RSI is in the high 60s. So nothing bearish here on this longer term time frame. If you wanted to get very short term, I would focus more on the 30-minute calendar, and it just looks like a lot of choppiness going on here, which is what we saw in the daily period where we made some highs back in early August right here on the 5th, and we've just kind of been in this sideways range. So again, know your time frame. The longer term trend is definitely to the upside. We do see some concerning signs with rates being lower. Copper has been breaking down some. The breadth has been weaker, but nothing at all that would signal to me that we have any major bearish concerns. Seasonality is also something to keep in mind. But at this point, are you going to be looking to go short here, or maybe just looking to buy some weakness? Again, it all depends on what your time frame is.
All right, Brian, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.